And so we made a pretty sharp shift in 2018 where we said we are going to do a lot fewer deals. So we took it down to about, call it 25 to 30 new deals a year across the group. We're going to endeavor to lead most of those deals.
Welcome to the Smart Venture Podcast. We're here to bring you the latest and greatest from the Silicon Valley, where unicorns roam and innovation never sleeps. We've got top investors, superstar founders, and well-known tech executives lined up to share their secrets on building and investing in successful companies. Just a quick disclaimer, while we may sound like financial geniuses, but please don't mistake us for your friendly neighborhood financial advisors. So let's get started and dive into the wild world of tech entrepreneurship. Great news for all our Smart Venture Podcast listeners. Since January 8th, I've been hosting a new daily live show, Venture with Grace, on LinkedIn Live at 9 a.m. PT every weekday. Follow me, Grace Gone, on LinkedIn to catch up on past episodes and stay updated with future ones. You will get insights from key industry players and have the chance to ask questions live. Don't forget to subscribe to the show on Apple Podcasts, Spotify, and our YouTube channel under the Live button. Join me on this journey and let's explore the world of innovation and investment together. This episode is brought to you by LG Nova. Get ready to ignite your passion for innovation at the 4th Annual InnoFest, happening at the iconic Palace of Fine Arts in San Francisco on September 25th and 26th. This two-day event, brought to you by LG Nova, is your chance to dive into the future with industry leaders and cutting-edge startups shaping health tech, AI, clean tech, life science, smart life, mobility, and more. And here's something extra special. I'll be hosting a panel at InnoFest, guiding a dynamic discussion on the future of AI and the workforce. Join me along with other thought leaders as we explore the trends and technology driving innovation and positive change. Don't miss out on this unique opportunity to be part of the conversation and help create a brighter, more innovative tomorrow. Register today and be part of the movement at InnoFest 2024. So to start off the show, I would love for the audience to get to know you a little bit more. Obviously, you have been at Intel for over 25 years and you have amazing track record and involved with many amazing companies in the AI space, as well as generally in the very cutting edge space. Would it be possible for you to give us core lessons that you've learned early on in your career that kind of shape you into who you are today?
That's a great question. By the way, thank you for having me, Grace. I really appreciate it. Core lessons that I've learned, I think a lot of people will tell you, wow, you have to be curious, you have to be willing to learn. I think maybe the big lesson that I learned, I started out my career in banking and then I went to law school and was actually a litigator for a while, and then moved into technology after that, after I went back to business school. And I think the big thing is, for me, has been you can't be a linear thinker. A varied background gives you a lot of instances to get a perspective that other people may not have. So if I had always been in technology, would I have understood what I learned from having to practice law and actually having to, conduct trials on behalf of my clients? If I had never done banking, would I understand financial statements the way I do? I don't think so. So my big core lessons are, in order not to be a linear thinker, you have to expose yourself to a lot of different things, because I think that informs your perspective as you start to get more experience in a certain area.
Totally. I wonder, your background is more towards law and banking, and how do you quickly understand all the really abstract concept in the realm of technology?
So one of the questions people always ask me is, how did you transition from law to doing venture capital? And what was applicable from one to the other? And I think most of the people that you talk to who have been lawyers before they got into venture capital, they did transactional work. They were typically securities lawyers, or maybe they did M&A transactions or something like that. Because I was in litigation and trial work, I had to learn how to question witnesses, figure out how to get the right information from them, and synthesize that into advocacy for my client that would convince other people that we were right. And so much of that translates into talking to founders and entrepreneurs, because I'm never going to be a deep technologist. I never have been. So I'm not going to wow a founder with my fourth level knowledge of whatever they're working on, building an AI model or constructing complex software. So my tack is more about figuring out sort of the man on the street questions. Who do you sell this to? Who is this relevant to? How does this, how does this work for, the person who's trying to solve a problem in his business? And I think, that perspective is something that a lot of people don't bring. I've questioned probably 1,000 people in my life, and that makes it easy for me to sort of figure things out. I can ask, and when I'm dumb, nobody's offended because I start the conversation with, hey, I'm not a technologist, so I apologize if I ask you a dumb question. But it turns out that you can learn a lot that way because you force people to explain what they're doing in terms that may not just be, technical lingo that they're used to using with their colleagues or partners.
Totally. I wonder when it comes to building up these expertise on investigation, we would call it, what are some questions that you would always ask the founders, and what kind of answer would you be looking for to understand the business model? How do you filter out the information that are like untrue in
Right.
general? Yeah.
Yeah. So a couple of my favorite questions I always ask, when you're talking to a team, I always want to know how the band got together.
Mhm.
And why did they decide to work together? What was compelling about the combination of people? And you usually learn a lot just from people telling the story of, well, I worked with this person here. I worked with that person there. We had a long history, as opposed to say, oh, I was an EIR at a venture firm and I met this person via LinkedIn. I decided to work with them, right? You learn a lot more about the fabric of the relationship because, when you're doing something as hard as doing a startup, there's going to be tension along the way. And a little bit of a battle tested relationship can be helpful. If you trust me and we've worked together, if we have a disagreement, usually we can get through it. If we just met, it's harder to figure out whether that's the case. The other question I like to ask is, Clayton Christensen, who was a professor at Harvard, wrote a lot about innovation. And one of the things he always said was, what are you hiring my product to do for you? Was a phrase that I love. And so after the team has told me why they got together, I like to ask, why did you pick this problem to solve? Right? What is it that you're solving for people and why is that compelling? And I feel like that's a gateway to not just what level of expertise does the team have in an area that they're focused on, because I think that's really important, obviously, but also do they understand to whom they have to sell, right? Are they building something they like and then they're going to try to sell it to somebody? Are they building something they think other people actually need and want? Whether that they figured it out through personal experience, through the work that they've done, maybe through the team that they've built. So you find out so much. You can also find out how big a market is. Like when they say, oh, we had these products where I worked before, they didn't work. We knew we could solve it a better way. I can start to ask questions like, well, what was the budget for that? Like who made the decision to buy those? Who was judged on the performance of that? And that it's sort of a natural segue into not just, hey, is your technology better? But what was the motivation for doing this in the first place? Because, a lot of people say, well, this is technology venture capital. We're talking to deep technologists. And that's often true. But at the end of the day, it's a business. And so somebody on the team needs to understand, why the heck are we doing this? Like if it's a change the world technology, okay, right? If I am designing transformers for the first time, for example, that's different, right? We understand that we're talking to somebody who's really focused on a new technology. But when you're trying to apply things, you kind of need to understand what's the motivation here? What history do I have that makes me relevant to solving this problem?
Totally. I completely agree with you. I feel like the conversation with the customer, understanding the sales cycle and the ticket size, who is the decision maker, is extremely important. And I wanted to chat a little bit, some question about the personal development set, and then we'll jump into the Intel Capital side of things.
Sure.
So, like, what would be like one skill that you're constantly trying to get better at? It could be a soft skill like sales, or technical skill like potentially coding or maybe accounting or something. I wonder what would be something that you're constantly trying to get better at.
So I thought about this issue a lot because, obviously I think it was Pat Summitt, who was the women's basketball coach, that said,
Mhm,
improving means making your weaknesses your strengths.
mhm,
And I think maybe the hardest lesson that comes only through experience is, how do you, as a board member, how do you balance between being supportive of a founder that you've backed, but also demanding execution and performance, and being, providing appropriate governance for shareholders in general, filling your fiduciary duty.
Mhm.
And that's something I feel like I'm constantly working on, because it's, on the one hand, venture investors talk a lot about, oh, we're founder friendly, we
Mhm.
work really hard to help our companies. And I think that's true. But at the same time, we have a responsibility to everyone who's invested in the company to, companies run out of money, companies make bad decisions, founders don't know everything. And so how do you balance the responsibility you have with the, obvious motivation, invested sort of motivation you have in making sure that, the company heads in the right direction?
That's such a interesting question. Even like the earlier stage investors who like put money in, but also they want to support the
Absolutely.
founder to perform the best, but they really need to provide some guidance to help them to grow into the direction that's actually going to be building a successful business inside. And I wonder who is on your personal board of advisors when we're talking about board member right now, not necessarily focusing on who in particular, but it's more of how do you select people that you trust to build a network of people that you would learn from continuously.
Yeah, it's a good question. I think, I have my wife and I have three boys. And so
Mhm.
a lot of times I hear myself giving them advice that I should follow myself. And we talk a lot about the difference between intelligence and wisdom as the kids get older and start to build their own careers. And so one of the big things is I like to have people who can advise me, who are wise, who have a lot of experience, who've seen a lot of things, because I, as much time as I've spent in this industry, I still feel like something new pops up every day and I have to figure out how to handle it. And so I try to surround myself with people I can call and say, hey, look, I'm in this situation. What do you think? And then I feel like I balance that. I'm one of the things I do at Intel Capital is I manage our AI team. And we talked a little bit about my background not being deeply technical. While I have wisdom on one side of my board of advisors, I need intelligence and technical depth on the other side, because I may not know the answer and I need to ask others. So we have people on our team that I use as advisors to me, even if they're maybe more junior in the organization to me, they know things I don't, right? They've been schooled in things that I never was.
Mhm.
So I use them as a sounding board. And then I think, the third set of people I use are the partners I work with, that we have a pretty diverse set of backgrounds. And so I know I can go to them and say, hey, look, I I'm not sure what I should do here. And because we're on the same side of the table, we have shared motivation and incentives, I get really good advice from them. So I think it's some combination of those three that helps me, navigate the issues I'm facing.
Totally. In terms of like selecting the technical people, I'm non-technical myself. And whenever I have a friend who is like a technical expert, I can only judge by their past track record experiences or their overall domain expertise. As a non-technical person, it's really hard for me to like judge who is like the most technical person in the room.
Right.
And I wonder, how do you select the people that you surround yourself with to make sure that you're getting the right advice from the right people?
So I typically like to choose people who have been practitioners more
Mhm.
than I pick people who are academicians or have it, like, you might have a postdoc in a certain thing, but if you haven't, Mike Tyson said, everybody's got a plan until they get punched in the mouth, right? And so I need to work with people who've been punched in the mouth a few times, right?
Mhm.
So that they, there's this compromise between the perfect product and the useful product sometimes.
Mhm.
And there's, I think, the same sort of combination or compromise between someone who is super technically informed on a topic and someone who understands what that piece of technology does in the wild, right? And what
Mhm.
happens to it, and what are
Mhm.
the unforeseen demands on it. So when I'm looking for technical people, I'd like to have people who have, how to put something in action, have been accountable for the performance of that technology, so that there's a little bit
Mhm.
of, maybe there's a little bit of engineer in that person, as opposed to just sort of scientist.
Totally. I wonder, okay, so since like we chat about the personal side of things, you've have been like at Intel Capital for over 25 years. Building a venture from for 25 years is a really long journey. I'm sure you have seen a lot of down cycles or the really bubbly cycles. And
True.
I wonder what are some core lessons that you've learned there? Also, for the audience who may not be super familiar with Intel Capital yet, why don't we chat a little bit more about what does Intel Capital focus on and what are companies or spaces that you're passionate about? Obviously, we'll dive into AI and machine learning a little bit later, but
Sure. Yes, let me take a step back for a second. Intel Capital began in 1991, and the original thesis was that Andy Grove and Les Videz, who Les was also a very early employee of the company, and it was on Intel's board at the time, felt that as Intel grew into the PC market and ultimately into the server markets, that it needed to learn more about what people were doing with its products.
Mhm,
And there was only so much you could do about that through customers, primarily because at the time, and even to today, Intel sells a lot of its products through OEMs. So it doesn't always have the view of the end user customer that it wants. And so starting to invest in some technology startups was a way to see where developers were headed, where markets were headed. And so it started out to be, actively involved in learning what was going on, but passive from an investor perspective.
mhm,
So Intel Capital did not lead rounds. It sort of waited for somebody else to lead and would fill in, sort of what you would probably think of as classic corporate venture capital behavior. And that continued for over a decade, and it continued through the internet bubble. Intel realized a healthy amount of gains through the internet bubble. And then obviously the bubble burst and things got tougher. And slowly over the years, we began to experiment. Well, what if we were a lead investor instead of just a follower? And what deals would we lead and how would we do that?
mhm,
And we did that again for another decade where we still primarily were making smaller investments in a lot of companies
mhm,
and taking few, if any, board seats along the way and still trying to learn. And the returns were okay, but they were super variable, right?
mhm,
But what we learned over that time was it's very difficult when you're not a potential lead investor to align yourself with the very best teams and the very
mhm,
best founders. And even if you do, which is typically a lot later in the process, you're a bit of an afterthought. It's hard to get their attention because you're not a meaningful stakeholder in the company. And unless you're a really productive go-to-market vehicle for them, they got other things to do.
mhm,
And so we made a pretty sharp shift in 2018 where we said, we are going to do a lot fewer deals. So we took it down to about, call it 25 to 30 new deals a year across the group. We're
mhm,
going to endeavor to lead most of those deals. We're going
mhm,
to align the incentives of the team with the outcomes of the investments. So we're going
mhm,
to, start to pay the success of the team based on the investment success. We're not going to change the strategic mandate, right? We're going to continue to hunt in fields that Intel cares about, but we're going to take bigger stakes in companies. We're going to write a bigger check, do fewer of them, and we're going to lead and take board seats where we can. So today, we lead about 75% of the deals we do. We typically own between 10 and 20% of a company, roughly. Those vary, obviously, depending on circumstances, but that's our goal. And we are taking board seats pretty much whenever we lead, so that we're trying to be in the front seat in terms
mhm,
of being on the board. Now, at the same time, we have an 11-person portfolio development team that is helping those companies in a variety of ways we can discuss later. But what we're really trying to do is be an active investor as well as actively engaged in building a strategic relationship with Intel because we're accountable on both fronts, both externally and internally. So that's who we are now as an organization. We expect to be able to compete with the best venture investors in the world. We think we have a good value proposition that resonates with founders, and
mhm,
we continue to try to elevate the capability of the team along the way so that we can meet those goals. So that's who we are. In my career here with Intel Capital, I guess I've gone from kind of the lowest of the low to one of the leaders of the team over those years. And yeah, we've lived through the internet bubble, the real estate bubble, and then the COVID bubble. And maybe the primary lesson that I've learned is it will always happen again. And people say, oh, I remember I wrote a little LinkedIn post a couple of years ago. People were saying, oh, it's the new VC model during COVID. I'm like, no, these things happen. Markets get overheated. You sell in those markets because,
Mhm.
hey, if prices are really high, that's a good time to sell. But this will end. And, you know, there's not a replacement for good fundamentals, great teams, having conviction and executing, as exquisitely as possible. So, what I've learned is I'm super skeptical of people who say, hey, there's a new model,
Mhm.
right? We figured it out and it's never going to be the same again. The business cycle is ruthless and I think is sort of like gravity. You can't fight it.
Totally. I would also love to learn about your take on being a corporate VC versus being an independent VC. Is there some factor that you would factor in to see if Intel has any alignment with the portfolio company? Would that be a must of the investment? Or would the investment primarily focusing on financial returns and that kind of things?
Yeah, it's a good question. I think the cheeky way I answer this question is I say
Mhm.
financially failing companies are rarely strategic to anyone, right?
Mhm.
So we limit the areas we look at for investment to what is relevant to Intel. And I always tell our team that, look, if you happen to be standing next to our CEO, Pat Gelsinger, and Pat says, how did investing in this company help my business? We need to have an answer for that question. It could be we think this company will create pull for our products in the market.
Mhm.
It could be this investment helps expose us to what developers are doing in consumer markets or enterprise markets or the cloud or AI or whatever it happens to be. It could be this is a new technology that could impact our business. It could negatively or positively, and we're trying to figure it out. So we wanted to be closer to it, right? There are a lot of reasons or a lot of ways something can be strategically relevant. And we have to do that, right? That's a core part of our practice. At the same time, even if something looks like it's relevant to Intel, if the team's not right, if the market's too small, that's not an appropriate investment for us either because we don't think it'll have impact on Intel. It won't get big enough to be interesting to Intel. And it won't be a good use of Intel shareholder money, right?
Mhm.
Because we want to be both. And
Mhm.
so our mandate is sort of look at the best teams and back the best teams who work in areas that are relevant to Intel. So I might find the greatest restaurant deal ever, or a REIT that builds those things we don't do, right? Because it's not relevant to where the business is today. So we'll politely say no to those. But because Intel participates in a lot of markets with a lot of products, I feel like we have more than enough
Mhm.
work to do. We don't need to make more by trying to get outside. So I think it helps us narrow the field a little bit and keep us focused in the right places.
Totally. I wonder, so since AI is like making a big wave right now, when you mentioned a little bit about the bubble, some people would argue the AI sector right now is a little bit overheated. What's your thought on that? And maybe we could also tap into where do you identify as a company like Intel or any company in general have a space to innovate, and where do you not see as a place that you would bet your money on?
So it's a big and really good question because obviously it's very timely. One of the things that we've been wrestling with as I get into this to try to describe it is, there's this idea of technologies being sustaining or disruptive.
Hmm.
And as we look at companies in the AI space in general, we're trying to figure out, is this what this company is doing sustaining or disruptive? And I think you could argue so far that Gen AI in general has been sustaining, meaning the big companies have gotten stronger. NVIDIA has gotten stronger. The hyperscalers have gotten stronger. There are only very few OpenAI. Maybe you can talk about Scale AI.
Hmm.
Very few companies that have really benefited from Gen AI at a spectacular kind of level that separate themselves from who companies that were already big and are just taking advantage of a new thing. So for us, we're trying to figure that out as we filter through things.
Hmm.
Where we have not participated as aggressively as others is in foundation model companies. There was so much money pouring into them, it became pretty difficult to justify doing those. They obviously took a lot of investment from hyperscalers in the form of credits. Intel's not in that business. And so trying to figure out whether they were properly valued based on that currency is difficult. Right. So we stayed away from that, but where we have been more thought, and we also stayed away from people who were building what we called application wrappers. They were building sort of a thin veneer around someone else's model. We just felt like some of those may gain traction very quickly, but it feels like maybe that demand could be ephemeral. That
Mhm.
that at some point, if somebody builds a better mousetrap, you don't really have any differentiation. You're sort of feeding a temporal need, not one that's going to be lasting. So a couple areas that we focused on. We have focused in the infrastructure layer of software. So, we made an investment in a company called Anyscale, which is a distributed computing platform that spun out of the labs at Berkeley, the Rise Lab at Berkeley. We invest in a company called RunPod that is building what I call a virtual CSP for inference. So it is using third-party hardware, but building its own software stack that can run across multiple service providers
Mhm.
to allow people to deploy model-based applications in production. Because we think not many people know how to do that, right? Enterprise at scale doesn't know how to do that today. They don't have the talent to do it. There's no VMware for AI
Mhm.
today that you can deploy as an infrastructure layer or Redshift or whatever your favorite, containerized or virtualized platform may be, that it allows you to do that. So companies are struggling to figure out how to do that. And some of them are going to access the existing hypervisors, but they're
Mhm.
expensive and they put you in their walled gardens. So we think
Mhm.
there needs to be alternatives to that. So we've been active in infrastructure, software, and services. We also look at what we call full stack applications. So
Mhm.
companies that are building models, they may not be large language models, they may be small models, say 7 billion parameters and below, that are building those for a specific application set so
Mhm.
that they can sell those into enterprise. I think today enterprise is more readily capable of consuming an application
Mhm.
and using Gen AI that way. You can buy it as a managed service or SaaS or whatever the business model may be, but they can buy it as a full stack solution. They don't have to worry about building their own models or infrastructure or anything else, worry about security, worry about instrumentation and orchestration and all that sort of thing. So we think that's a very interesting space. And we've done some work there in companies called Lilt and Bria and OnWorld, InWorld, excuse me, and a few others that represent that kind of full stack solution. And then, so I would call those companies that are trying to do some business model sort of evolution and business model sort of maybe in some cases revolution, but trying to take advantage of what we know people need and doing it better, but doing it for Gen AI rather than something else. On the other side, we are looking at, obviously agentic capability. We've been looking at what comes after transformers because we think there it's a little bit more of a technology play. So
Mhm.
it's something like transformers today, on one hand, are wonderful because they've enabled all this innovation. On the other hand, they could destroy the US energy grid if we're not careful, right? Because it's just so compute intensive that it's taking, it's using power at a rate that is concerning for a lot of people. So I think there's a lot of motivation to see what comes next. And whoever gets that right is obviously going to be rewarded handsomely because the savings could be spectacular if 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 done well. So we're looking at sort of stuff that innovates around business models, and then
Mhm.
we're looking at stuff that will innovate around core technology, and then staying away from, as I said, the super capital intensive stuff like just building large models for different use cases. I will say one other thing. I think what we found is pretty interesting. I haven't seen that many people talking about is with the advent of the cloud, software became cheaper,
Mhm.
right? At least up to a certain scale, right? You
Mhm.
could use other people's infrastructure. All the chat was, wow, you can build a software application and deploy it for almost nothing today. You don't need that many people. You don't need to buy any equipment.
Mhm.
And that enabled the SaaS model to develop. And obviously that was a business model innovation more than a capability innovation. So
Mhm.
every software was cheaper. AI has made software more expensive, right? We talk about productivity gains and all that. We haven't realized all that yet. And I'm sure you've seen the wave of reports from Sequoia and Goldman and others saying, hey, we haven't seen it yet, right? We're wondering when we're going to see the benefits everybody's talking about.
Mhm.
Software is a lot more expensive. Models are expensive to train. You know, it's expensive to put together a full stack application and deploy it in the market. So in a way, it's really changed software again. And we haven't seen the operational leverage that AI is going to bring. We talk a lot about productivity gains for developers and others, but this idea of software being more expensive again is a pretty interesting one for investors.
I completely agree with you. There is software is getting more expensive to build. This morning, I was chatting with a hardware investor, and then his opinion was sometimes investing in hardware, the cost would be lower than if you're training an AI model, as GPU is costing so much
Right.
these days. So I wonder, since like Intel has both the expertise in the hardware and software, would you bet on like any hardware in general? And for the cloud infrastructure space, since there was a revolution and when everything is began to becoming cloud, and with the AI revolution, what is the equivalent of a cloud switch that is happening?
So, it is interesting that AI has reinvigorated silicon and systems investing in the venture community, right? For a long time, it was don't call me, right? Because it's so expensive, obviously, to build an ASIC and to get it into the market. Easily $100 million in capital required to really get to market with any success. You answer your question is absolutely we invest in hardware, and we have invested in accelerators for inference, both for what I would call core markets, but also for the edge.
Mhm.
So we're not afraid of that. We've invested, an example of a company is Samba Nova, for example, that we're significant investors in as an example. But we've also invested in optical technology as the need to move data around on board or even in a data center becomes much more critical. Optical networking capability is going to become increasingly important. So we've invested there. And we've invested even in data center rack innovation as well, both for energy density, but also for ease of deployment, with a reasonable amount of software included. So we are not scared when it comes to hardware investing. And in a lot of ways, it's the new day for hardware. An example is a company called Astera Labs, which we invested in. They started doing retimers. They moved into other areas and went public this year, have gotten significant traction because of the advent of AI. So, we think that we never stopped investing in hardware because of who we are, but we think now it's kind of gotten cool again because of the demands we see from, being able to train a model to when we start doing inference at scale, that's also going to be an incredible strain on the compute infrastructure we have today.
Totally. I read an article about you guys are also investing in AI chips, and I wonder for the audience who also may not be technical, what is the primary difference between AI chips versus like a traditional chip? And in terms of like design, so I've seen a lot of startups that are focusing on the software side of things because of there's a lot of testing going on that's gonna be very menu in the past, but right now they're designing the services to help people design better chips without the menu adaptation of like each generation of the chips. Also, I wonder, where do you identify as a area that like should be improved within the chips manufacturing or AI chips designing, and where do you think are not necessarily the money or time well spent in that space?
Right. So to answer your first question about what's the difference, I mean, obviously CPUs are general purpose processors, right? So they're very programmable and you can do almost anything with them. But uh, as you program them, you can introduce overhead and sort of reduce performance depending on what that workload is. So
Mhm.
it's very flexible, but you pay a penalty sometimes on performance when you program to do certain jobs. We talk about an ASIC, an application specific integrated circuit, is built for a job. It is not typically programmable, but it tends to do a certain job very, very quickly. So it is much less flexible and much, much more higher performance, right? Uh, the idea, of course, if you're an ASIC company, is you got to make sure that somebody wants it for what you designed it to do, and then you can sell that over and over. So when I mentioned inference accelerators that we had invested in, that's what I'm talking about. Companies who have specifically done that for inference, the type of workload that, once a model is trained and it's in production and it's starting to interact with, an application is interacting with users, what does it infer? What does it learn? How does it do what it's supposed to? Right? How
Mhm.
does it, like, for instance, when you interact with ChatGPT and it gives you an answer, you're not training that model. That model is inferring what you're asking for and giving you an answer to it. And that's going to be the new workload, right? That when people deploy millions of applications based on generative AI models, the inference workload is going to go up. There's going to be a need for acceleration.
Mhm.
GPUs are kind of somewhere in between. They are also programmable. It's a lot harder to program than a CPU. But their architecture allows for vector processing, which lends itself well to training models. And they can parallel process in a way that CPUs can't always. And they have a memory model that allows you to accelerate. So for training, it turns out that GPUs do that much more quickly. And as you increase their capability and daisy chain more of them together, you can do the bigger and bigger jobs. And that's why you see the demand for accelerators and GPUs right now, because the workloads are around training. As
Mhm.
we get into inference, it gets more complicated because inference can be done on CPUs, accelerators, GPUs, all of them, depending on what the workload is and what the volume is. So I think that market will be much more heterogeneous than the training market is proven to be. So that's sort of a little bit of background on the differences.
I've seen a lot of software that are trying to solve the chip manufacturing issue. Who will be needing to manufacturing their own chips if that's even a market? And unlike Intel, I definitely feel investing in the AI chips market makes a lot of sense. But for the regular trading company or any which kind of company would need to actually create their own chips. And a lot of startups are trying to solve the problem of the software within the chip manufacturing industry,
Yeah.
especially testing, all that kind of things. I just wonder if that's like an actual real problem to needed to be solved, or it is just we're in a rush of where everyone needs to produce their own chips right now.
Well, I don't think that everybody needs to produce their own chips. I mean, you hear about companies like Apple and
Mhm.
Amazon and Google and Microsoft designing their own chips, but these are the most valuable companies in the world with the strongest balance sheets out there. They can afford to do the work because they can attract the talent, but then also pay the costs of having what we would say a chip fabbed somewhere. And
Mhm.
so I think outside of venture-backed startups, there are very few companies that have the talent or the balance sheet to be able to do it. There are even fewer companies in the world that can fab a chip that are
Mhm.
foundries. Obviously, Intel has a foundry business. TSMC is the foundry leader. Samsung has a business, and there are a few others in the world. But that is an insanely capital intensive business. I've lost track. It costs about $5 billion to build a chip fab today, and that those costs are going up as we get down in size of the nodes. And um, there are very few companies on planet Earth that can really afford to do that. So I think people will continue to buy their chips from others unless they're one of these big companies. But I think maybe the more important point is people are either going to buy services from other people to do this work. So they may
Mhm.
go to a hyperscaler, or they may go to a virtual CSP, like I was talking about with RunPod earlier, who avails themselves of the infrastructure other people have invested in, or they'll buy a system solution that they deploy themselves if they're big enough and sophisticated enough. I think people want to see that whole solution
Mhm.
and they want to buy that whole solution. So I think you'll see the market start to respond to that need, because as things get more complex, the more help you need from your vendor to do it right.
Totally. Speaking of the big companies, the enterprises needs of AI, I was reading an article on Intel Capital's website. For the enterprise need, there's fine tuning, there's AI explainability, the multimodality
Mhm.
and containerized models. I'm sorry, I feel like
Yep.
but I wonder for all these different capabilities that enterprise need, what does the budget look like for a big company to invest in AI? Not big company, but like also just enterprise in general. There's the medium enterprises, there's a small SMBs. Who is spending on what in terms of AI? And as an investor, which market would you focus on most? So some investors are focusing on enterprise, some are focusing on SMB. And how do you pick where to spend more time on?
It's a great question. And I think you may know Tom Tungus just was publishing some stuff about AI
Fast.
pricing recently. And so I think honestly, people are trying to figure this out in real time because, again, as people build these more expensive software solutions, what's the right price to capture? And I think that right price can't just be about how much it costs to provide. It has to be about what's the outcome for the customer? Is it worth it? So, are we measuring this in terms of productivity gains? Are we measuring it in terms of being able to do something I couldn't do before? And then
Mhm.
how do I price that in a way that, what's the context? So it could be like we invest in a company called Lilt that does machine learning and generative AI based translation and content generation for large enterprise. If I can automate the creation of my collateral
Mhm.
such that I don't have to be involved. Maybe I have a human in the loop, maybe I don't. But if I could automate that so that high-end enterprise class collateral can be translated into multiple languages at the same time, where I can generate blog posts or other content in another language in real time and get that out to my customer, what's that worth? Right?
Mhm.
That could be incredibly valuable. Right. So I think, and it's worth way more than hiring somebody to translate your content for you. Right.
Mhm.
Because now I don't have to worry about that. And now I know I can get things into the market the way I want them without having a long chain of service providers to deal with. I don't think there's a perfect answer to what the pricing will be at. I mean, I think you have to price it relative to what people are paying today. We've seen, like Lil has seen their customers with huge productivity gains, right?
Mhm.
And we think that will continue to be borne out in other applications. So we think it's about you, much like any other innovation. It's like, hey, I'm not going to capture all the value you've derived from using my product, but I'm
Mhm.
going to capture more than my predecessor was because you're getting a lot more
Mhm.
from me. So I think we're still trying to figure that equation out perfectly. I think there'll be very few big companies that build their own AI infrastructure. The
Mhm.
largest banks, the largest pharmas clearly will be able to do that. They can afford it and they can afford to pay the talent to maintain it once it's up and running. But I think everybody else is going to try to avail themselves of services, much like cloud, right?
Mhm.
And we've seen fewer and fewer companies build their own IT infrastructure. They just use the cloud. It'll be that way again. What kind of cloud, I think, is still an open question. I think the door is reopened for competition to the hyperscalers, and we'll see if somebody can emerge out of that as a real competitor, the way say DigitalOcean did to some of to Amazon or GCP, for example.
Totally. Love the companies that you just mentioned. I want to double click on Scale AI, which is like one of the most recent investment you guys made. I believe it's Series F, which is very late stage. I wonder what do you see in that opportunity in general? And like for Intel Capital, what are some collaborations or things that you would do with Scale to create even more value?
So just why does Intel Capital make an investment like that? First, we are primarily an early stage investor, but we have the freedom to invest throughout the cycle. And
Mhm.
so we do look at growth investment opportunities because we think there's real returns to be gained there. And some of those companies are working at a scale, no pun intended, that
Mhm.
that makes it easier for Intel to work with them, right?
Mhm.
Sometimes it's hard for a big company to work with a very small one. So and it's a way for us to sort of balance out our portfolio with some later stage bets against the early stage portfolio that we have. So that generically is why we're interested in growth stage
Mhm.
opportunities. With regard to scale, there are a lot of labeling companies that started several years ago. And what we admired about scale was at every sort of inflection point in the market, they aggressively made the right decision to embrace the trend. So,
Mhm.
they started out with doing really well in the government, and they did well in autonomous transportation. And then when Gen AI, when ChatGPT dropped, they saw an opportunity and ran after it. So you know, am I admire their management team for listening to the market and reacting to it. And so as a result of that, their growth has been really impressive. And we were felt compelled to make the investment. We think, they are on a track where perhaps they have an opportunity to be, one of the first publicly traded AI companies. We'll see. It's obviously an open question at this point. But Intel Capital has an opportunity to work with Scale AI because we have a program to introduce our portfolio to enterprises. And
Mhm.
so, and not just through Intel Salesforce, although we do that too, but also directly through our own program. So we felt like what we do well from a go-to-market standpoint to help our companies dovetails nicely with where Scale was going, right? How do they get into more enterprises more quickly? How do they get to the right people? We feel like we can help them with that. So that's an obvious way for us to collaborate from a go-to-market standpoint. At the same time, particularly with the generation of synthetic data and how people are training their models, Scale has exposure to parts of the market that Intel wants to learn more about. So there's also a great opportunity internally for Intel to learn from Scale and take advantage of what Scale's doing, and at the same time inform Scale about what Intel is doing, so that we can create some opportunity for mutual benefit there as well. So we thought this kind of checks all the boxes for us. There's an obvious collaboration opportunity, and there's obviously an upside opportunity here that we can take advantage of at the same time.
Totally. As you mentioned, late stage opportunity versus the early stage opportunity. What are some other opportunities within the AI realm that you think is extremely exciting, more towards a later or more matured business model?
So we are, I think, for later stage stuff, we're really interested in full stack application companies that have
Mhm.
really started to show that they can take off. The we For a later stage opportunity, we want to be well beyond product market fit, right? We
Mhm.
want to see that, the company understands the go-to-market machinery, even if they haven't scaled it yet. And, really understand their customer and what their customer wants. It's one thing to have all the money to build a scaled out go-to-market function. You can raise capital for that. But through the early stages of a company, it has to learn how to do that well before it can really credibly raise growth capital, in my opinion. So we're looking for those things. And I think the most mature part of the AI market is the full stack application market. I think everyone else is still trying to figure out, like people say, we're going to be enterprise infrastructure software and AI, still figuring it out, in my opinion, right? Because enterprises, the customer IQ isn't high enough yet. I mean, it's beginning, but it's still not quite there. And the foundational model companies are sort of kind of turning into an oligopoly they're kind of made at this point, right?
When you were thinking about, let's use the AI application side, for example, RunPod, you mentioned, can you describe from when you meet the founder of the company and then what do you sell them to later on making an investment? How do you help them grow?
So with RunPod, we met Zen and Pardeep the first time. And after you've been doing this a while, sometimes you just meet people and you're like, I want to do business with these people, right? I was just the clarity of thought that they had, the understanding of what their customers wanted
Mhm.
was just visceral, right? It just came through in such a clear way. And for first time founders, their ability to sort of talk about why people use their product and what was important was really impressive. They were also growing really rapidly. So it was clear that the customers agreed with them that, think this was an interesting capability. So that gave us plenty of air cover. But in that first meeting, it was just, we talked early in this conversation about how did you get the band together and what problem were you solving? Those guys just knew what problem they were solving and had a really clear view of what they needed to do to solve it. And so that was compelling for us. Since we've invested, and this is the case with a lot of companies we do this with, there's kind of two separate areas of value we can talk about. One is just I, as the investor, or Asaf Araki on our team, or Ali Farmer on our team, we work together with RunPod. what can we do to help? Like, how do we coach young founders on how to build a management team? And how do we get other investors involved? And what's the right way to build a strategy? How do you conduct a board meeting? All of these things that younger first-time founders need to do, we help them with because we have the experience to do that, much like any other investor would. On the other side, I mentioned we have a portfolio development team. So we do a couple things with them. One is I discuss the go-to-market opportunities. So we talk to them about how can we help you with go-to-market? At what stage are you talking to people? With RunPod, they're talking to developers. So what channels do we have to get to developers that we can use to accelerate that activity for them?
Mhm.
Two is we actually have a program where we will second engineers with our portfolio companies for a short period of time. So an Intel engineer who has the right expertise can go spend 6 months at one of our portfolio companies to work on a project for that startup. Our engineers really like it because they get out in the world and they see what's going on. And of course, it provides extra resources to our company. So when and if RunPod says, hey, I really need an engineer who can do this, and we have them, we can often, and these are senior engineers, principal engineer level people at Intel who do this. And then third is simply around, they've worked with us on PR and marketing and that sort of thing, and we've helped them get the word out that way. So there are a bunch of different ways we try to help the companies from an institutional perspective.
Totally. I wonder, so for example, you mentioned like you guys have a go-to-market team as well. When it comes to constructing a team, obviously you're a leader of this fund, and what's your thought process on in terms of hiring and the building the function that's helping the portfolio company to grow? What are some insights and thought process that you have to put together a really well-rounded team?
It's a great question. When I mentioned earlier that in 2018 we
Mhm.
changed the group a good bit, and when the leader of the group at that time, a guy named Wendell Brooks, called me and he said, "What do you want from a new organization or a new way of doing business?" The first thing I said is, "I want to be the three musketeers. I want to be one for all and all for one." And so I'm a big believer that teams need to have a common goal and be willing to work together in order to do that. So we are very team oriented. We don't silo people. So, hey,
Mhm.
you go work on AI and you're on your own and come back and tell me how you did, right?
Mhm.
I'm a big believer in mixing capability and expertise on a team to get better perspective. So whether that's diversity of experience or background or whatever it may be, I'm a big believer in, I mentioned earlier that I wish I were a more nonlinear thinker sometimes. I
Yeah.
think putting people of different backgrounds and expertise together creates that nonlinear thinking because it's not just everybody's you know, in the same track. So we, for us, we have people who are deep technologists. We have people who are very business oriented. Maybe they were in investment banking before they started in venture capital. We have people who have been software engineers. We have people who have been, you know, running business units. And so we want that diversity of experience in order to have as much perspective as possible. So when we're recruiting, we call it the four pillars of venture capital success:
Mhm.
proprietary deal flow, the ability to find, investigate, win, and prosecute a deal to close, the ability to add value after close, sit on a board, provide good governance. And then the fourth is kind of the three musketeers bucket: grab a shovel and help your colleagues. So, for us, they need to be team oriented. They need to complement who we have today. They need to be able to smell the money,
Mhm.
and they need to be relentless networkers. They just can't take no for an answer when they want to get after something because, venture capital is not always a friendly sport, right? People are competing hard to win, and you need to be better than they are. And some of that is your resources and your background, but a lot of it is just tenacity and the ability to develop empathy with the people you're talking to. So those are the kind of attributes that we're looking for when we recruit.
Amazing. I love all these like different areas that you're looking for. And we're at the last part of the interview. I have a quick 1 minute fire round for you.
Sure.
First question, what's your favorite book?
My favorite book is the Wright brothers biography by David McCullough.
Mhm.
Just what those guys went through is sort of, it's like the classic story of American invention, right? It's easy to just say, oh yeah, those guys built the first airplane and flew it out of Kitty Hawk on the Outer Banks, but so much went into it. It's a great read.
I love that biography. And I just like, I feel like so fascinated by like when people would just like really innovating something that completely doesn't exist from the past. It was just so crazy to know. And yeah,
Well, what they suffered so much to make it happen, just, they talk about what it took to be out on the Outer Banks way back then when there was nothing out there, and the summers and the winters and everything. It just, what they were willing to suffer through to make it happen was as impressive as the accomplishment itself, in my opinion.
for sure. Who would you invite to your dinner party?
Two people, Alexander Hamilton and John Coltrane.
Who made the biggest impact in your career?
So I'll give credit. He might laugh if he listens to this, but a guy named Scott Darling gave me the best opportunity in venture capital I had. When we worked together at Intel Capital for about a decade, he runs Dell Technology Capital now, but he gave me my first real break in venture capital, and I'll always appreciate that.
Where can we find you outside of work?
Well, I happen to live in North Carolina, so you can usually find me in the North Carolina mountains or on the coast here.
Amazing. Well, Mark, thank you so much for coming on the show today. It was such a fun conversation.
Same here, Grace. Thank you for having me. I really appreciate it.
Thanks for tuning into Smart Venture Podcast. If you learned something from the episode or even just mildly tolerated me, please subscribe and leave a 5-star rating. I promise I will keep bringing you more successful, insightful interviews and insider tips about startups. Remember, sharing is caring. So tell your friends to listen too, or enemies, I won't judge. Until next time, keep venturing smartly.